Howdy, Jacob here. Today we're looking at Kanzhun, ticker symbol BZ. It is in the interactive media and services industry, 8.3 billion market cap, a little bit less enterprise value. Founded in 2013 in the People's Republic of China. Looks like they provide online recruitment services. So growth looks amazing. Operating margin, they're just starting to make a profit, but gross margin is huge. Income statement shows a lot of investment in research and development. So that's hindering their margins now, but will hopefully create growth and higher margins in the future with good good free cash flow. Use of cash is really reinvestment and a little bit of share repurchases. Balance sheet shows 346 million cash on hand, 1.5 billion in short-term investments, and then no short-term debt, no long-term debt. So from a balance sheet perspective, very safe. We're not looking at a lot of history though, so kind of going to be a quick analysis here and take everything with a grain of salt due to the fact that we just don't have a lot of data, so we're just going to be assuming a lot, creating a story. I think first thing with that, one, it's from China. Two, it is not a lot of history, so I'm going to want an immense return here. On the revenue growth side, I mean, we're looking at immense growth here, but can they keep that going? I just don't know with what I'm seeing. And then with that, maybe market average return or market average terminal value. Hey, let's do quite a bit of range here, 15, 20 with share repurchases, 80 million, to offset stock-based compensation, 148 million. I mean, I don't think they're really going to do that. So let's increase it 1% a year. Yeah, I mean, I don't know. Can they grow 20% a year? Possibly. I just don't know anything about this type of business, and so it could just be one where I'd want to look into if they can really grow like 20% a year. If so, I mean, yeah, it's still not anywhere near the valuation I'm looking for here. So I'm just going to wait for this company to get to a price that's obviously cheap. But again, there's some companies that you're just not going to understand. There's some companies that are in locations and geographically located that don't make sense to you. If you're not comfortable investing in China, other than maybe even Baba or Baidu, the biggest two, maybe Tencent, I don't know. I always get a little hesitant outside of the big three that the Baidu, Baba, maybe JD, and Tencent. Otherwise, like it's just tough to really be confident in these numbers because I mean, in America, you have the SEC. There's plenty of other places where it's very stringent to report actual data, and I mean, if you file a 20F, that means it's likely being looked at by a PwC or Deloitte or some accounting firm. But I don't know. It's just hesitant. So here, even with my assumptions, even with my frothy assumptions, we're saying it needs to fall quite a lot. But just don't invest in things that you're not comfortable with. You don't even waste your time on them. There's so many companies out there. You don't need to waste your time on things that you don't want to invest in and things that you don't understand. Limited it to the companies that you actually get and can understand their type of business, how they make money, how they could increase revenue, how they can project out free cash flow. And those are the type of businesses I would limit my search down to. So anyways, hopefully you enjoy the video and have a great rest of your day.